Hey everyone, John Henry here, and today in the market psychology video, we're going to be taking a look at crude oil starting off as a range and then transitioning into a very strong trend kicking off the rest of the morning. Now, yesterday, in this case Friday, we had a very strong bearish day lower, very strong bearish day, and we opened large gap up. Maybe there were a bunch of sellers that took profit down here, but something seems a little bit odd, right? Now, we did see a very strong final candle of the day closing very bullish, and there are going to be a lot of buyers who probably bought that low and are very happy to come back to start the week off with a nice profit to the upside. So knowing that there are likely buyers who are very happy about this move up, and there are sellers who may be very interested in selling, thinking that they missed this whole move down, and that causes us to go into a range. We go up. Very weak first candle of the day, especially with a doji follow through into a bearish move down. This could be an opening reversal lower, but in the context, we know that the buyers and sellers are probably going to be fighting each other. They try pushing down and completely fail. Huge wick on the bottom. And in that case, with that big wick on the bottom and a complete failure for the sellers to break out lower, it's much more likely that buyers are going to buy the close of that bear attempted breakout, just looking to the opposite side, right? Go back to the highs of the range. Remember, a range, we know we need to be buying low and we need to be selling high. So buying low and then looking to get out at the highs and sell in reverse, right? You can buy at the lows, goes back up to the highs, take profit on the first objective down here, and reverse into a short, knowing that we're likely in still a range and we're probably going to fall to the opposite end. Very, very likely scenario here. But then something a little bit strange happens after the sell fails to continue, right? If you didn't sell up here at the highs, you didn't get any follow through. And that's why in a range, we need to sell high. Selling down here is more likely going to be a trap than anything else. And that's exactly what it was. We start holding an area of rising support, right? We see connect the dots A to B, and then we find support at C, holding that bottom edge. If we're in a range, we shouldn't be holding rising support. We should be breaking through support going down to the lows of the range and vice versa at the highs. We should be breaking through any falling area of resistance towards the highs, but that's not what's happening. We're finding support at rising areas of support in this case, as well as prior monthly support across in the middle. We're getting stuck right here, and with a beautiful buy bounce off of that low with really no closing underneath that monthly support and rising support all coming into the same place, that gives way for the buyers to try to break this out a little bit further up, and that is a nice buy to essentially say the sellers are probably giving up. They're not getting the rotation that they want, and there are trapped sellers as well who sold there, and maybe even sold there, who now are stuck in the move. That's going to force their hand and shove the market right back in their direction again. So that is a nice buy for a move back up through the highs. But then you get this gargantuan bull breakout candle. No buyer or seller are going to believe that there's going to be continuation after that move up. Not that big, not that fast, and not in the context, right? We have a range day on our hands at this point in time. There's no reason to believe any continuation, including a breakout this strong. You're going to have sellers that see that move up, and buyers who see that move up and say, you know what? Look at this candle. That's a gift from the trading gods. Let's just get out. And they close their position, and that causes a pullback. And that is a nice short-term scalp to try to move the market counterintuitively back again, knowing that the buyers and the sellers are going to fight over this level, actually agree in this level before they start fighting about whether or not this is going to be a breakout or if it's going to be just a failure at the highs. So overall, right now, the buyers in this case are assumed to be exiting, the sellers are assumed to be entering, and you're going to look for a quick counter scalp to the downside. And that is all it gave you, because shortly thereafter, we got stuck at these highs and we saw the sellers completely fail to get it below that level of support. That is a big, big glue. We start forming a little bit of a pennant formation. We start forming a line in the sand at the bottom. We're now finding rising support off the lows. Everything is pointing to a potential upside break once again before the sellers can get an attempt to take it back lower again. And this was actually the trade of the day video, so make sure to watch that. But just a beautiful breakout towards the upside for an easy move up in the context of the situation. Now, it's still anticipated that we're a range on the day. There's a good chance that this could easily fall all the way back into the originating range. At this point, though, given this breakout is sticking so far, as long as we stay above this breakout point and we don't really get much of a pullback lower, there's a good chance that this just keeps on going and we go all the way back to the prior week's high for an attempt to continue a bullish momentum up. But that's going to do it for this one. Very interesting combination of both technical analysis and market psychology. Hopefully you learned something. Hopefully you found it interesting. And we'll see you next time.